Dear viewers, welcome to this episode of Expert Speaks. We are receiving a lot of inquiries with respect to alternate investment funds, how to choose them, what are the advantages and disadvantages of that, is it available for common man? All these questions we keep getting requests day after day. In our recently concluded Global Investors Conference, Nivesh Shvidesh, in the month of February, I had picked up the same topic and interviewed Mr. Akhil Chaturvedi, Executive Director and Chief Business Officer at Motilal Oswal AMC. This is an AIF which is made available even for people who are there in the US. This is a US tax compliant AIF which is being made available from Gift City in India. If you want to know more about what are AIFs, how you can invest, who can invest, and everything you need to know about AIF, this is an interview which you must watch till the end. This is NRI Money Clinic for you, and I'm Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
For the benefit of those people who are first time introducers to the AIF, what are AIFs?
So, good morning to everyone, and it's a pleasure to be here. Thank you, Mr. Bhatt, and I think it's a great conference. I came here last evening, so great crowd. Congratulations to you. I think this is the first one, right?
Yes.
So, best wishes from us and at Motilal Oswal AMC. It's been a pleasure to interact with you on previous occasions, and we have discussed on this topic several times. Now, AIFs basically is a license which started in India for domestic investors. It was issued by SEBI. So just like we have a mutual fund license, we have a portfolio management service license, we have an alternate investment fund license. The idea behind getting the AIF license was basically to standardize and regulate some of the alternate asset classes much more stringently, and position the products, because these are alternate asset classes, so therefore it could be slightly higher on the risk, because the asset classes are slightly different. Therefore, what SEBI did was they kept the minimum ticket size at 1 crore. But now within the alternate investment funds, or AIFs, there are 3 categories. There is a category 1, there is a category 2, there is a category 3. Category 1 is basically for those manufacturers or asset managers who want to launch funds which will cater to investing in venture capital funds or startup kind of a ecosystem. Then we have category 2 of AIF license, which is more to do with private equity, real estate, private credit. And then we have category 3 license, which is for listed equities and long short kind of absolute return products. So these are the 3 categories. Now and it's becoming very, very popular in India, the whole AIF assets under management is now crossed 12 lakh crores in the last 10 years. So it's becoming very, very, very popular. All the 3, the largest is category 2. Now when Gift City started to come more in visibility, and a lot of AMC started to position themselves in Gift City, because it was much more simpler, operationally it was much more easier, and offering products like AIFs also was very, very simple for the fund managers to manage. So simply the regulator in Gift City, IFSC, kind of just replicated whatever was being offered in India, and they have replicated that into the Gift City. So one can create a mutual fund in Gift City, one can create AIFs in Gift City, one can also create PMS in Gift City. Everything is just kind of mirroring. The only difference between the Indian vehicles and the Gift vehicles is that Indian vehicles take INR, and the Gift City vehicle takes dollar. So you can get Indian products, Indian vehicles also now in dollar terms. The other thing Gift City has created in terms of AIFs is that the regulations are far more simpler. Now, for example, we had a India-based fund located out of Mauritius. Now, there were these NRI limits, the cost structures were very expensive, taxation and all that stuff was also not very, very effective. So, when you talk about Gift City, this NRI limit has been removed. Now I can have a fund with 100% investors as NRI. So at least that is not a limitation for me to grow the fund. Alternatively, I can create a lot more products, a lot more asset classes. So we have our sister company, Private Equity, they have launched a real estate fund for the NRIs. Very soon we'll be launching our CAT2 private equity fund for NRIs. And we are raising good money out there. I mean, like $500 million, $600 million. So there is a lot of interest of the NRIs, and they have a good vehicle now to park their dollar investments. What I understand is that NRIs have some money in their NRE accounts, NRO accounts, which they comfortably park in the Indian investments, but they have a lot of money in the dollars. Now the Indian money in NRE and NRO was coming into India, but the dollar money was not coming into India. It was getting allocated all across the world. With this gift coming through, we can now, happily with these sessions and the knowledge, education, what we are trying to provide, I think we'll be able to invest, invite a lot of NRIs to invest their dollar assets into variety of asset classes into India through the GIFT City route.
You brought this GIFT City issue for this discussion now. That gives me a few more ideas. See, there is a large chunk of persons of Indian origin. They don't have a PAN card. They don't have an NRE, NRO account. They don't know how the Indian system works. Does GIFT City allow these people to invest without any of these things?
Absolutely. You don't need anything. It's just like any offshore jurisdiction. You're not really investing in India. You're investing in an offshore jurisdiction. So there is no PAN card which is needed. So that makes the life easy. Those kind of flexibilities, conveniences available. Just like if you are investing in some vehicle in Mauritius or Europe, UCITS, it's exactly similar to that. So to answer your question, you don't need a PAN card and all of those kind of things. Aadhaar card, PAN card, all those things are not needed.
If you say you don't need a PAN card, Aadhaar card, then my assumption is that it's just not restricted to PIO. Can we onboard a foreign national also?
Anybody. It's completely offshore jurisdiction. So I can take money from anywhere and everywhere, except for the global restrictions, like we don't take money from the FATF countries or where there are some restrictions, more from geopolitical perspective. But otherwise today, our running fund, we are having investors all across the world from different geographies, right from US to UK to Middle East to Singapore. So we can take money from anywhere, and we can take international, global investors or non-Indian investors also.
So we should request our NRI friends today, it's just not that you invest in India. This is the best place for you to invest today. Please tell your other nationality friends with whom you are working, your colleagues, your friends, your neighbors, and ask them to make best use of this opportunity as well.
Absolutely. And we are getting our funds also part of several global platforms. So I spoke to you yesterday briefly, like there is a platform called Crystal, very popular for the non-Indian investors. You can simply go on that platform and you can access to a lot of India dedicated funds through that platform, completely digital, right? So these kind of things are also available now for the ease of convenience of onboarding.
Let's understand this AIF a little bit more in detail from a common man's perspective, the questions that could be there in his mind. In case of PMS, in India, you need a demat account. How does the holding of these securities in an AIF work? Who will be the custodian of this? How will a customer, having parked that money, be assured that his money is in a secure place, it is under a regulatory supervision?
Like I began by telling you that this is a regulated product. In India, regulated by SEBI. In GIFT City, it is regulated by IFSC. So there are regular checks, regular audits, and we have to follow all the criteria which has been laid down by the regulator. Now, AIFs in simple terms is basically, it's like a mutual fund. But on a lighter note, we call it rich man's mutual fund because the minimum application is 1 crore, right? It works exactly like a mutual fund. We issue, you don't have to open a demat account, trading account, all of those things. Just like how you buy a mutual fund, you cut a check in favor of the scheme, and proportionately you get your units, and those units are available to you. There is a NAV. So basis the NAV, you can purchase units. Basis the NAV, you can sell the unit. So In simple terms, it just simply works like a mutual fund.
In India, when somebody buys a mutual fund, you have an online access for these people to check what is my NAV, where is it moving today. Does it have a daily valuation? Is there an online access for customers to see how their investments are performing?
Not yet, not yet. Early days. We are also trying to figuring out the operational and the legal formalities to, kind of, at some stage we have to make this digital for sure. So everything is getting now towards technology and digital. So it will happen. For now, we are sending monthly account statements because at the month end we do the tax calculations and give the final NAV. So every month you will receive your account statement with the holding units valuation. On a need basis, you can also ask from the asset management in between if you need your account statement. That is also available. So right now it's more of physical. But like I said, there are these platforms which are digital.
Right.
So if people like you can be onboarded on, if you onboard on that platform and then you get your investors on that platform, practically you will see everything live.
Dear viewers, while I'm talking to Mr. Akhil Chaturvedi, our attempt has been to interact with you. Please do ask your questions, and the moderator can intervene any point of time. You can pick up the questions what the audience is asking for and ask Mr. Akhil Chaturvedi, and he will give you an answer right now. Please do ask the question, feel free, and moderator, you can stop me at any point of time. Priority is for our audience today.
Absolutely, absolutely.
My next question is anyone and everyone can invest in AIF, or is there a word of caution, or is there a regulatory restriction that such and such a person can invest, such and such a person cannot invest in AIF?
Like I said, everybody can invest, anybody. There could be a FPI who wants to invest, there could be an institution who wants to invest, there could be an individual who wants to invest. So at this stage, we have existing investors. We are talking to a lot of prospective investors, which are global asset management companies, family offices, institutions, HNIs, and retail investors. The only limitation right now with our license, the one what we have, is the minimum application amount is $150,000. That's the minimum kind of a subscription amount basis the regulation, right? So barring the minimum application amount, broadly there is no other limitation per se.
How does the documentation works when it comes to question of, let's say somebody is there interested to invest in AIF. What kind of a documentation it goes through? Is it simple? Is it complex? There is so much of a check. When it comes to question of investing through international routes, there is a money laundering checks, FATF checks, notarizing of document. Is it simple? Is it complex? How does it work? Can you take me through a whole process?
Yeah, no, it's fairly easy. It takes a couple of days for the paperwork to move to and fro between GIFT City and the investor. But basically, very, very simply, we are just trying to take the basic document. So let's say you decide to invest in a particular GIFT City fund. The basic requirement is to do your KYC check. So what we need on day one is basically your identity proof, your address proof. So when those documents arrive to us, we go through those documents, we do all the due diligence, all the KYC related checks, and if everything is fine, then we confirm to the investor that the documents are fine, they can initiate the SWIFT transfer. Right? So once the SWIFT transfer is initiated in 3 or 4 days time and the money is cited, then we also allot the units. Parallelly, what we are doing is once the KYC is cleared, we begin the application filling process. So everything is done through email, via emails, to and fro exchange. But in simple terms, first KYC check, KYC through, fill the application form. Parallelly, you can do the fund transfer. Once the funds are cited, we are allotting units on a weekly basis. We allot the units and everything is through.
So it looks complex, but once you get through...
It's not complex. You invest anywhere in the world, you have to give your basic documents, which are your identity proof and your address proof. right? If you are a corporate or if you are if your holding structure is of a different structure, let's say you are a trust, then the documents could be slightly different. Like we have some clients who are having a trust structure. So there are those basic KYC related checks only. Once the KYC is through, basic application form which has to be filled because there is a share class, there is a minimum amount, so on and so forth, all those things. So just like filling up any other financial product form.
Right. Investors invest a big chunk of money in an AIF. How liquid are these products? Is it an open-ended product? Is it a closed-ended product? Somebody invested the money and let's say that he needs some money. Let's say that he put 150,000 and it is quoting a valuation of let's say 175,000 USD right now. Can he skim off that excess thing?
Yes.
So one of the important decisions people have to make is what's the liquidity?
Good question. Liquidity is on a monthly basis. So once every month, which is the last day of the month, is when you can put in your redemption. You can do a full redemption, you can do a partial redemption. The only limitation to a partial redemption is that you have to maintain the minimum 150,000 limit, the minimum amount. So like you gave an example, if somebody has invested 150,000 and it's become 175,000, you can redeem to the extent of $25,000 and maintain your $150,000. Or you can do full redemption. So full redemption or anything excess of the minimum application, which is 150,000. Once in a month, last day of the month, the window is open for exit, and within 10 working days, the money is given back to the client.
So these are not closed-ended funds.
This is an open-ended fund. These are not closed-ended funds.
So anybody can, okay, I invested
You can
money.
come in anytime, you can exit anytime. There's no restrictions.
Right. Are there any exit loads if somebody comes in today and exits?
There are small exit loads. Again, it depends from plan to plan, scheme to scheme. So, so when you are actually investing, you will figure out. But yes, there are both options available: load options, no load options.
Right. AIFs, by its nature, for me, appears to be quite complex. Not that it doesn't go like a structured way. It is designed as per the manufacturer's a particular theme. What is the role of an advisor? Can an investor simply come and buy it just like from a shelf? Or there is a role for an advisor here to look into the feasibility? What's your opinion? What is the best way the investor should come into an AIF?
So honestly, the alternate products, whether it is not only AIFs, even if you look at PMS for that matter, generally these products are not widely distributed products. We generally don't do too much of advertisement on these products. You will not find the kind of AIFs what we have on Facebook or social media, or we are putting hoardings, billboards. So honestly, investors typically will not get to know that, okay, what kind of products are available on the GIFT City or the AIF, which manufacturer is doing what kind of product, right? So that kind of the opaqueness is there between the at the prospecting stage. In case of AIF, in fact, even the regulator says that it's a privately placed memorandum. It's a PPM kind of so you have to actually sit down with the client and go through the discussion and then close. You cannot actually do advertisement of AIFs. That's the regulation. So there is where the advisor and the distributor comes in the picture, because as a manufacturer, we liaise with the distributors and the advisors. We update them on all kind of products. Like that, you are talking to many manufacturers and you have access to all kind of products. And then you take these products, discuss it with the investors. That's how the investors actually get to know. So there is I would say there is a very, very large role of distributors and advisors in helping the investors understand, position the product, understand the risk appetite, do the paperwork, documentation. It's an end-to-end thing, right? From a product advice to onboarding, till the time actually the customer takes the money out. So, and these are very complicated, sophisticated products. You always need somebody to help you out. It's not like a small mutual fund where you go online, buy anything, sell anything. So it's not a commoditized product. It's a very, very niche and sophisticated product. So I would certainly recommend everybody to consult, your distributors and advisors.
Now, when it comes to question of mutual funds, you have a benchmark. every fund gets benchmarked to index or something like that. People can measure how is the fund manager performing. Does AIF also have a benchmark, or it is I put money and it's free? It could happen anything. How does it work?
No, for the listed funds, there is a benchmark, although we are not mandated to have a benchmark, right? Because, like I said, these are very sophisticated boutique strategies. It really is not trying to, be around the index and try to beat the index. Having said so, for the listed products, we prefer that, okay, there should be some benchmark, because then you are trying to do something better than something, right? So why should somebody come to me? So from that perspective, our listed funds, our benchmark is the MSCI Emerging Market Index, right? So that is the benchmark for us. But although the strategy is not really trying to see what is there in the benchmark and then trying to hug the benchmark and then trying to beat the benchmark. So it's generally our strategies are thematic strategies. We'll talk on it, but we have kept the benchmark. Idea is that we have our absolute returns in our mind. Products are positioned, but we are always conscious about what the benchmark is doing. So at least you have investors can see that, okay, had I just put in the benchmark, I would have made, let's say, X percentage. But by giving to Motilal Oswal, I made X plus plus. So, you can see that delta. So that way, from transparency perspective, we have kept a benchmark, honestly. Not mandated, but we have kept.
You come from Motilal Oswal, and Mr. Ramdev Agarwal, we hold him in very high esteem. He's just 5 years older than me, and we have seen him over last 30 years. We hold him in very high esteem. Your wealth creation study is very popular across the investor community. The AIFs you intend to launch launched in AIF is coming out of this wealth creation study, what you learned out of it. And if somebody has done a study over 30 long years, experimented with us, and you know what works right, what doesn't work right, the AIFs you have put in place from Gift City has anything to do with this wealth creation study?
So wealth creation study done by Ramdevji, like you rightly said, for the last 28 years has actually helped us carve out our investment philosophy. Our investment frameworks, what we use to create portfolio is the QGLP, Quality Growth Longevity Price, is also an outcome of all the wealth creation studies which have been done. Now, a lot of frameworks, what we use to identify tailwinded themes, sectors, stocks, a lot of learnings actually come from the wealth creation study. For example, our oldest alternate strategy is called Next $1 Trillion Opportunity. Now, this strategy we launched after the wealth creation study was done in 2007 when India's economy crossed the 1 trillion mark. That time, Ramdevji kind of visualized that now we have reached, like after 58 years, we became a $1 trillion economy in 2007. He wrote a wealth creation on the same subject. The topic was also Next $1 Trillion. And what he said was that incrementally now, every $1 trillion will come at a much faster pace. And that is how it is happening. Every 5 to 7 years, we are adding 1 trillion. Today, we are 4 trillion. So we created a fund on that theme, trying to benefit from the sectors and the stocks which will benefit as the economy grows. So that's how we have actually created a lot of our thematic alternate products are actually based on the learnings from the wealth creation study. For example, value migration strategy again comes from one of the wealth creation. Mid to mega strategy again comes from one of the wealth creation. In fact, we copy the name also, right? Because there are a lot of insights in those wealth creation. We just simply take those insights. It gives us a framework to invest. Right? And the storyline also becomes very good, because then there is a story, there is a framework, and there is a output. So you are absolutely right. While the fund we have currently launched in the Gift City is not something which is coming out of the wealth creation study, because this is based on the founder's theme. But a lot of our domestic Indian products are actually based on the wealth creation studies. But within the founder's fund, the frameworks are inspired from the wealth creation.
Right. One of the interesting things about AIF is you have a free structure. Unlike in a mutual fund, you have to restrict yourself to that particular large cap, mid cap, yes, thematic things. But in case of an AIF, you can put together anything that you think is going to be working. Plus, it gives an advantage for an investor to be there before the market has caught the importance of that particular stock or anything like that. From this perspective, can you explain a little bit in detail the founder strategy which you are so excited about from the Gift City? Let the audience know what it is.
Yeah, so first I'll explain to you the strategy and then I'll explain to you how the portfolio is getting constructed. Now, founder strategy, this idea came to us early 2023. Again, learning from wealth creation study. So one of the wealth creation study, what Ramdevji did was, in the initial part of the wealth creation, he just kind of went back 25 years and he tried to see that over the last 25 years, which are the companies which have created fastest wealth, so fastest wealth creation, consistent wealth creators, and biggest wealth creators. So he bucketed companies under 3 cohorts: fastest, biggest, and consistent, right? All of these 3 are very, very important. And then we just kind of ran the data. Now what we saw was that in the last 25 years, out of the top 10 fastest growing companies, 9 out of 10 companies were founder-driven companies or entrepreneur-driven or promoter-driven companies. When you see the top 10 companies in terms of biggest wealth created, 5 out of 10 companies were promoter-driven. And in terms of consistency also, almost 7 out of 10 companies were promoter-driven, right? And if you take an aggregate of all 3, we saw that 10 out of 10 businesses, the top 10 fastest, consistent, and biggest wealth creators are all promoters. Now, this was HDFC, this was Eicher, this is Sun Pharma, this is Kotak. All of these names, you know, right? Everybody knows, because in the last 25 years, they become so big that these brands are now the household brands, right? So one thing which was very, very clear, that promoters make a lot of wealth. So we went on the second, to check the proof in the storyline. We said, okay, let's look at the numbers. So then we saw in the last 10 years, if you compare, revenues, operating profit margins, profit after tax, in all of these core financial variables, if you compare promoter-oriented businesses or founder businesses versus multinational companies versus public sector companies, in all of these financial parameters, promoters were scoring 2 to 3% more than the public sector and the multinational. So 2 things which came out clearly. One, promoters make a lot of money. Why they make a lot of money? Because they own the business. They want to make the business very big. They have growth mindset. They have fire in their belly. They will be very conscious on cost, expenses, very focused on profitability, and eventually markets give value to the companies which make a lot of profit. Now you compare this with multinational companies, they are highest of the highest quality businesses. You can't beat a multinational company, right, in terms of quality. And they are legacy, 100 years, 200-year-old companies, but they are now become very, very big. So their growth rates are very, very small. I mean, you will not lose money, but you will not make money. You will make your 8, 9, 10% types. And you come to the third cohort, which is the public sector, or companies owned by government. While there has been a huge shift in the quality orientation of the public sector, but still there are small pockets which are good, there are a lot of pockets which are not good, and there is always a fear that a government intervention or policy change can actually impact the profitability of PSUs. So we said, why not create a fund which is actually dedicated to the Indian promoters? And that's how we created in 2023 fund strategy, which was theme-based on the promoters. What we said was that we'll buy into any company which has promoter stake over 26%. Any company with 26% and over of promoter stake with senior management ESOP qualifies to be a founder-oriented business. Then we put some of the other checks like minimum profit of 100 crores, minimum ROCE of 15%, minimum earnings growth of 3% higher than the benchmark, and then you do the QGLP check. So from 500 companies, I could create a portfolio of 25 to 30 stocks. So this is the funnel how the portfolio gets created. And to the last point which you said, it is a flexi-cap portfolio. It's a theme-based fund. We are looking at founders. We are not looking at large-cap founders, mid-cap founders, small-cap founders, but we are looking at founders who will create a lot of wealth in the next 25 years. Therefore, very naturally, the portfolio has a higher allocation to mid-caps and the small caps and smaller allocation to the large caps. But otherwise, it's a flexi-cap fund. Wherever we find good entrepreneurs which can give us good growth over the next 3, 5, 10 years with good quality mindset, good economic moats in the business, all those businesses will qualify to come into the founders. Now, over the last 2 years, this has become our flagship fund. We have a PMS which is running in India on founders theme. We have multiple AIFs which are running in India on founders theme. We have listed as well as unlisted combinations also which are running in India, because founders for listed, founders for unlisted. And when we launched our GIFT City fund also, we launched the founders vehicle. So as such, this product has a 2-year track record, amazing track record, like with alpha on a 1-year basis, 2-year basis, since inception basis, double-digit alpha. Good absolute returns, double-digit alpha, and the size or the corpus of the fund on this theme is now in excess of $1.2 billion.
Wow.
And my GIFT City fund, which I launched just in June, it is the fastest growing GIFT City fund actually. A lot of my peer group or my competition calls me work here, So this fund, GIFT City, like just in 4-5 months, we raised $125 million. That's the fastest 1,000 crores, right? And still we have a pipeline. So every month there is a $4-5 million. We got some family office. In fact, as we speak, I'm talking to a family office in. I should actually not talk, but some of the large family offices within the Middle East. These are, family offices of the rulers and all of those things, right? But a lot of good profile of clients are taking interest in India, in GIFT City, in our product.
Oh. See, one key risk the general public is worried is AIFs do not have extreme regulations like in case of a mutual fund. So you can do what you feel like. Of course, within the disclosures or what you have mentioned that this is what you are going to do. 2 key risks are concentration risk, excessive exposure to individual stocks. Second is a fund manager risk, the bias, or he may get tilted towards a particular sector or a particular stock. How is your system geared to conquer these 2 risks?
Yeah, so while regulation gives you a lot of flexibility, we have kind of implemented our own risk management policies, which is applicable across all our products, not only for 1 or 2 or 3, all products. So basis our risk management, fund manager typically cannot go beyond 9% in a portfolio. So that's like the max limit. There can be a passive breach for some time, but eventually the quantum has to be brought down the moment you cross the 9%. So I've put a upper cap limit. In fact, if you cross 7.5% in the portfolio, we usually don't buy additional shares. So because as the stock price is going up and the weights are going up, it's also getting little expensive. It makes a lot of sense to actually trim down and take your profits off, right? So irrespective of the regulation, we have put our own risk management. So as far as possible, we are trying to keep our portfolios flat, 30-35 stocks, 4 to 6% weight per stock. Don't under-own any stock, don't over-own any stock. If you are a high conviction investor, you cannot have portfolio with 10 stocks of 0.5%. So typically in my portfolio, minimum allocation will be 2-3%, highest allocation will be 8-9%. But blended basis, we are targeting 4-5% per stock. So that's the first thing. Secondly, we have inbuilt profit booking stop loss frameworks, right? So they have been institutionalized. We on a very regular basis do a very stringent check on the liquidity frameworks of the portfolio. How soon can I liquidate my portfolio and give all the money back to the investors? And even on the sectoral deviation relative to the benchmark, the deviation which is allowed is only to the extent of 10%. So you cannot be like completely away from what's happening in the market. So we have put, because it's not only performance, you have to do consistent performance. To do consistent performance, you have to build very strong risk management. So risk management keeps the portfolio very, very smooth, secular growth, lower volatility, and a smooth ride for the investors. So
now that the markets have corrected and the stocks what you're owning is the Indian stocks, and these are from small, mid caps kind of a category, I presume. For somebody who wanting to invest, how do you say, how do you feel? Is it a good time for them to come in now, wait for some more time and then enter?
Yeah, so buy on dips is what we always say. I mean, so India is going to do very well in the next 5 years. We have no doubt about it. I think if you sleep today, wake up after 5 years in 2030, there are various studies which are suggesting that Indian economy will be $7 trillion. If you take 100% market cap to GDP, our market cap should be $7 trillion. Our market cap currently is $4.5 trillion. So 5 year out, I think India could be a good potential, wealth creation story. Now, this is a great time when, due to variety of factors, in the interest of time, I'm not getting into the specifics. But yes, India did very well. Valuations were expensive. There are some global factors, more specifically coming from US, liquidity, all of those things are kind of, leading for the markets to correct. And it is always a good time to buy when the markets are correcting. It's a sale which is going on. Best of the best companies are available. Today, 80% of Indian companies have fallen by 20%. So now is the time when you can actually come back in the market. Volatility will be very high. I think this is a 6-month window, 6 to 9 month window. So my suggestion would be that start with the minimum 150,000, and then every 10 days, 15 days, whenever you find there's an opportunity, there is a small correction. Nowadays, every day is a correction. So keep adding $10,000, $15,000, $20,000. So let's say you want to create $1 million portfolio, build it over the next 6 months. Try and take advantage of all the volatility in the market, and then just kind of what we say, buy right, sit tight. So do the buying right part in this year. And then just sit tight. Don't get bothered about small 4-5% NAV correction. I think in next 5 years, I think you will be pretty happy with the outcomes.
Thank you, Akhil.
Dear viewers, hope this video answered all your queries pertaining to the alternate investment funds which are coming from GIFT City. If it helped you to take the meaningful decisions based on the interview that we have done today, the next thing to do is give me a thumbs up. We depend on your subscriptions. Please do subscribe to the channel and hit that bell icon now. Do share these videos with all the persons whom you are connected with and on all your social media. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert next week. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.